Picture a factory floor. On one side, you've got engineers forging these incredibly precise titanium parts for a jet engine. And on the other side of the same factory, they're machining the casings for, say, the smartwatch on your wrist. It sounds like two totally different companies, right? Two different worlds. Well, what if I told you it's not?
So what's the link here? I mean, how on earth does the world of aerospace manufacturing, we're talking high-stakes, super long-term stuff, connect with the crazy-fast, high-volume world of consumer electronics?
Well, the answer is actually wrapped up in one single Indian company, a company that has totally mastered one of these worlds and is now making a massive, and I mean massive bet on the other.
And that company is Aequs. It's a name that comes from the Latin word for equal, which is kind of perfect because they're trying to balance two incredibly different futures.
All right, so here's how we're going to break this all down. We'll look at the two halves of the company, check out their powerhouse aerospace side, and then the big consumer electronics gamble. After that, we'll see how you even put a price on that, and finally, what the future might hold.
Okay, first up, let's talk about the engine that really powers this company. It's world-class aerospace business. And look, this is no startup. We're talking about a deeply entrenched, super respected player in a very, very exclusive club.
And it really doesn't get much more exclusive than Airbus, right? Just look at this relationship. It kicks off more than a decade ago with just one contract. And fast forward to today, Access is a strategic, award-winning partner. You just don't get that kind of trust overnight. It's earned year in and year out.
And we're not just talking about a few nuts and bolts here. No way! We are talking about over 5,200 different components. Their parts are everywhere, in landing gear, inside the engines, even the core structure of the plane itself. So yeah, their work is quite literally flying over our heads every single day.
And that work? It's locked in for the long haul. I mean, an order book worth over $800 million? That gives them a crystal clear view of their sales for the next 3, maybe 4 years. In the world of manufacturing, that level of stability is just incredible.
So here's the bottom line. Aequs isn't just any supplier. They are a Tier 1 partner to giants like Boeing and Safran. They've snagged Airbus's big D2P award 6 times. And get this, they're the only supplier in India that can do the whole shebang, from a chunk of raw metal to a finished part, all under one roof.
So when you have a business that's this strong, this profitable, you gotta ask, right? Why on earth would you jump into a completely different and frankly notoriously difficult industry? Well, that's the gamble. The whole opportunity really stems from this massive global trend called China Plus One. You see, for decades, China was basically the world's factory floor. But now, all the big electronics giants are thinking, maybe we shouldn't have all our eggs in one basket. So they're looking to diversify, and India is right at the top of their list. And it's not like they're flying blind here. There's actually a playbook for this. Back in the 2010s, a Chinese company, Luxshare, did exactly this. They went from a tiny supplier to an absolute titan. Aequs believes it can follow that same path, taking all that know-how from high-precision aerospace and pointing it straight at complex gadgets. And this chart, wow, it really lays out just how big this gamble is. You see, the consumer side is expected to lose money at first while they're getting everything up and running. But then, look at the projection for 2030. That is a massive swing into some serious profit. It's the definition of a high-risk, high-reward play. Okay, so you've got this one business that's a stable moneymaker, and another that's losing cash but has huge potential. How in the world do you put a single price tag on a company like that?
Well, the way analysts do it is pretty smart. They basically split the company in two for their calculations. Right now, they figure about 3/4 of the value comes from that solid, dependable aerospace business. But that other quarter, a full 25% of the company's value is based entirely on the hope, the potential, that this big consumer electronics bet actually pays off. So let's put some numbers to this. Here's our baseline. At the time this analysis was done, the stock market had the company's shares pegged at 126 rupees. That price kind of bakes in everything people already know. The good, the bad, the stable, and the risky.
But the analysts who wrote this report, they dug deeper, and they saw something more. They set a target price of 145 rupees for the next 12 months. That's them basically saying, hey, we think the market is underestimating this company's potential.
And that gap between the current price and their target, well, that works out to a potential upside of just over 15%. That one number is the analyst's bet, their vote of confidence that this unique mix of stability and wild potential wasn't being fully priced in by everyone else. But of course, a story this ambitious is never that simple. It's not all smooth sailing. The road ahead for Aequs is all about balancing this huge dream with some very, very real risks.
Yeah, this is no sure thing. The biggest worry? That the consumer electronics business just doesn't scale up as fast as they hope. I mean, it's costing a ton of money and requires taking on debt. And while all that's happening, competition is getting tougher in their main aerospace business. So they're feeling the pressure from both sides. So really, it all boils down to this one question. Aequs has built this incredibly powerful, reliable engine with its aerospace business. Now they've decided to strap a giant rocket to the side of it. Is that rocket going to blast the whole company into the stratosphere? Or is the sheer weight and risk of it all going to be too much for that engine to handle? Well, the next few years are definitely going to tell the tale.